the government's privatization of public entities, the first being the Kenya Pipeline Company. The initial public offering was opened on the 19th of January this year, and is set to close. The sale of those shares is set to close on the 19th of February. And the government is divesting about 65% stake to raise 106 billion shillings. And we'd just like to make sense of that, what that means for investing, for Kenyans accessing investment options, government accessing funding. And to have this conversation with me in studio is Shadrack Manyinsa. He is a research analyst at Pagamon Investment Bank. Karibu sana, Shadrack.
Thank you.
Awesome. So maybe you could just give us a context of how we got here.
Yeah, so I'm from Pagamon Investment Bank. I'm Shadrack Manyinsa, a research analyst. So in terms of how we got in terms of probably the privatization. Yeah, this is part of, it's like looking for entities, most of the public entities, especially these, most of them are not making profits, and it could be better for the government to release them to the public, especially to the private sector, and that can support in terms of profitability for these entities. Most of them will become more profitable in the hands of the private sector, especially the locals, and that is the reason why we had, of course, the IPO. Part of the same is to raise capital in terms of money for the government, and number two, to increase liquidity in the market, promote the capital markets in the market, in a way, is a way sensitizing the market on how probably the capital markets can be enhanced, what it involves. So this is part of, like, we had the last IPO being issued quite some time ago. That is, the best example is Safaricom, which was the best, but then we can see where it currently is. So it's an investment option to the public, which enables now investors to invest with an opinion, or rather a forward-looking for returns in the future. Definitely, it might not be in the next few months, but a long-term investment.
You mentioned Safaricom. That was listed, or rather, that was the largest public offering in the region, actually, in East Africa. The one that we have now, KPC, is the largest since the 2008 Safaricom IPO offering. And the one that is being sold right now is at 9 shillings per share. The minimum is 100 shares, so that is 900 shillings. That is fairly affordable for the public, right?
True, it's very affordable at a pricing of 9 shillings per share. It could be fairly affordable, but now you might look at it from the valuation point of view, which I believe is okay. And then looking at now, probably something that was not added might be land, which is KPC has quite massive land holding, and part of that, if you can look at it now from that perspective, the valuation is okay.
Right.
So the pricing, at a pricing of 9 shillings per share, a minimum of 100, and then post-listing, it will come, even one share can be traded. Very affordable. Yeah.
And why is it important for Kenyans to get a share of this critical infrastructure?
A major key reason is for you to be, it's a national entity, it's a local national entity, which everyone should be part of it in a way that you can share the national cake. Like now, KPC is a revenue, is a profit-making entity, makes profits. Number two, these profits are distributable to of course, the shareholders, the ultimate shareholders, which means that you are looking to invest in an income-generating company with a very high potential for future growth. So number two could be capital gains. It has a potential for capital gains. We are seeing Kenya is a gateway to the East African community. So part of the oil that, okay, I didn't explain, first of all, that KBC is an oil throughput entity. It deals with in terms of transporting oil from the sea to the mainland. And then, now part of that oil that it transports, it exports to the regional markets. And part of these regional markets include Uganda, Rwanda, Burundi, South Sudan. So a half of it is actually exported. So you can look at Kenya in a wholesome way, where we are a bit developed, and looking to the future, probably our neighboring countries are also developing. So that means more revenue for the entity, which means more income for any investor who is likely to invest. Yeah.
And then if that is the case, why privatize a profit-making company?
First of all, is to focus on national agendas, especially government agendas. So in a way, it's like the government is looking for let's focus on one thing, on performing for the common mwananchi. So, and then let's leave these others to be supported by the private sector. Number two, it could be, a major reason could be to make it even more profitable. Look for a good case will be Safaricom. It was a government entity 100% owned by the government when it was listed, and now how it is. In terms of what we call as corporate governance, it improves corporate governance. So in a way, even decision making, it will become more easier for decision making for an entity that is publicly listed, and then corporate governance is improved. In terms of the bureaucracies in the government, most of them will be eliminated. Like now, according to the management, they said they had some proposals which have been there for a long time without approval. So in a way, we are looking for these proposals could be made easier. Some of the things they can do, like now, diversification of revenue away from the oil export or oil transport can be done more easier. They have other objectives or other strategies that can be implemented faster in the private sector compared to the government sector. Yeah.
Mm-hmm. So when you talk about corporate governance, take us through how that is set to be improved.
Now, on corporate governance section, we have CMA, or rather NSC, CMA in collaboration with NSC, in collaboration with all the intermediaries. They have a corporate structure that governs all listed entities. And part of this corporate structure, it helps now to streamline decision making in terms of even the board decision, onboarding new board members. Of course, that will change, not the current, which are mostly the government. So that will improve in oversight, the company oversight. And of course, ultimately, when you improve your governance, definitely the end goal is to generate more revenue. So as that corporate, all the structure of the company is changing, where we'll have now 65%, or rather 6 out of 10 of the board members will be now from the private. That will promote now in terms of transparency in decision making, and of course it will be more easier to make decisions on how this is the agendas we have. This is what we need. Even financing will be easier in the private compared to the government. So in a nutshell, this will help in terms of finally making the entity more even profitable than when it's at the start of the government. Yeah.
And just comment on how important that such IPOs or the privatization will distribute wealth to the Kenyans.
Now, of course, we expect participation. That is how it is structured. There is retail, who are local mwananchi. There is also corporates. So, and of course, there is the East African holdings, of course, with the other, the composition of how it is structured. Now, the common mwananchi who will invest, like, let's say 100 shares in the stock, definitely, in the long term, let's assume that stock will grow to around 15 shillings in the next 3 or 5 years. Definitely, you have made a capital gain. A common mwananchi had made some capital gains, and then there is an aspect of dividend payouts, which the company has promised to pay at least 50% of its earnings to the shareholders. So definitely that means income to the individual shareholder, who is the common mwananchi, and then prospects for, of course, growth in terms of the prices. So I look at it two-way. And another thing I can say, of course, it will cushion for inflation. There are other things like the stock is very liquid. So in a case where you might need money, still that the stock is tradable in the NSE market, which means it's very liquid. It can be, of course, liquidated anytime. So for emergency cases, it still makes it a perfect option. And then for growth in terms of capital preservation, in terms of wealth creation, a long-term goal it's a good investment. Yeah.
Let's talk about investor education. We know that investments in the capital markets, they've been growing over the past few years. There was a time you could not even imagine it, but now it's very, very easy, you know, with even technological tools. Tell us about the role of investment banks, investment industry in general, in ensuring that there's inclusivity in investment.
Now, part of the roles of investment banks, not only Pagamon or any other, part of it is to onboard clients, to train these clients, to train retail clients, and then make them aware this is now what you're entering in. So it's increasing awareness to the market as part of course, that is part of the CMA, who is the regulator, but now as intermediaries, investment banks come in terms of training, doing valuations, of course, making recommendations of different investments that are available, and then making it easy now. Like now we have fully gone online. Like Pagamon Investment Bank, we are fully online. You can open an account end to end just at the comfort of your seat. Yeah. And then from there, of course, there is continuous trainings, like now we are having, immediately after this, we have a webinar where we are training, how do you go, what is the process from the start to the end. So we take you through a journey of investment, right from onboarding, even continuously as you build your wealth. So part of it is to create awareness, of course, now increase, now in terms of the uptake, we are present in terms of the social media, in terms of now making it more aware to the public, especially to the young generation, where now they can be able to onboard themselves at the comfort of their zones. So it is easy, it's critical for investment banks in that they create awareness, and of course they facilitate the investment process from the start to the end. Yeah.
Now, I will stay there with the financial literacy, because 70% of Africa's adult population is financially illiterate, and it starts from childhood, so to say, you know. You grow up not knowing how to treat money, and then you get a job, now you have money. It takes a few years of, you know, guesswork before you figure out what to do with the money. So I would like to hear from you in terms of what more can be done to ensure that people are financially literate and are making sound investment decisions.
More can be done, especially on from the digital side, and then it should be made easier. For example, investing should be made as easy as possible, such that some of the limitations, like the cost of transaction, can be reduced to the minimum possible. Of course, there should be government interventions, like for example, there can be incentives for listing, for other new listings to be onboarded. Like now you can look at agriculture, we can have others to come in. And then in terms of the requirements for listing, some of them can be reduced such that we can have like more SMEs, because part of the capital markets is to create what we call like capital. So the requirements for that should be lowered. I understand that CMA in liaison with the NSC, they have a sandbox where at least they take through someone or a company or a corporate through a process of financing, and then of course now at the end of it, it should not be left there. There should be go now onward up to more SME listings. We should increase our listings from the current around 66 companies to even more, to include more. And then part of the governance should be strengthened. Corporate governance, which is a key in the sector, should be much strengthened so that investor returns will be there. If a company has a dividend policy, they should be able to adhere to that. So investor returns should be there. And of course now continuous training, like what we are doing currently, that is very key, because it helps now to make someone aware and on board. We have currently onboarded actually so many clients through this engagement. So you can imagine if we had like 3 IPOs or 4 IPOs in a year, that can, of course, it will increase market sensitization. I know through the privatization, we have had some roadshows. That is very key. We have had to go to the common man, to the markets, which now is very key in terms of the training. some people don't know. Some of them, they don't even watch some programs like this. So those trainings, those shows should be increased. And then now the government should focus on how do we sensitize or how do we onboard more companies to be listed. Like now, we have many banks, of course, which might not reach the threshold of maybe capital. Could there be like a merger and then reduce the requirements for that, such that they can onboard and be listed in the NSE market? So that will increase awareness generally.
So if someone wanted to purchase these shares, take them step by step, how is this supposed to be done? Okay,
the first thing is to understand what is going on. KBC, in terms of it's currently, of course, it's a government entity, but that is being listed. Now, understand why should I invest? Part of the reasons why I should invest, I'm looking for investment options, and the capital markets provide that. So now the process flow, it starts from, of course, first of all, creating an account, having a CDS account. That is very key. And we, as Pagamon Investment Bank, you can go to our website. There you can create an account within hours. Within like 30 minutes, you should be able to create an account. From there, after creating an account now, that is the first step. And then now, there's the second step of now applying. Of course, now the money should be available. Of course, some savings should be there. And then now you channel that savings to the IPO. Actually, from now, we have more trainings, like now today. And then after this, there is a training for how to onboard from the start to the end. I wish I could have come with my presentation, but now it's something that you can do at the comfort of your sitting room. So somebody should be able to create an account. Number two, go online, check there is a link there, of course, how to apply there. Now, that is KBC IPO something. Then, after you have logged in, then there is a process flow. It's a very simple process flow that one can take through. Number one, now you select your agent, who are now the investment banks and brokers, where Pagamon, we are part of it. And then there is a process, you indicate your CDS account on that portal, on the online application portal. And then from there, the number of shares you are applying for, you can indicate. It will auto-populate the amount you'll pay. Then there is an option where you can, of course, indicate your bank account in case of a subscription, which we foresee, and then for refunds. Then from there, after all that, you go, it will prompt you for payments. On the prompt for payments, you can choose either to pay now or pay later. We advise pay now because the timing is, the deadline is next week.
19th,
which means you need to pay right now. And then, of course, now the process flow will continue. But in case you apply for more amounts, maybe that you cannot transact on M-Pesa, you can pay later. It will give you a code on your message. You can transfer through bank to the 3 banks that are listed there. And that is the process flow.
Right.
Yeah.
And so the accessibility is definitely being made easier by investment banks such as yours. And even remember yesterday, was it yesterday or the other day when ZD Trader was launched? Yeah, in collaboration with Safaricom and NSE. And so let's talk about let's call it the democratization of the capital markets and where we are headed in terms of accessing those investment options.
Okay, making investment easier. Going digital is making that very easy. So going like what the government launched in liaison with a player in the market, launching CD, applying at the comfort of your phone, then it's the best way to do things. Just like I told you, one can apply for a CDS account, one can make an application, one can make a payment right on phone. That is the way to go, and actually that is the future of investment in the capital markets. So I think currently what was done is the best to be emulated. We are looking how we can partner in terms of how we can come in as an investment bank, such that we can also bridge the gap that exists, so that we can have more onboarded, and then now anyone can apply using, of course, maybe M-Pesa or other platforms, then that is what we are looking forward to.
Right. Still on the KPC IPO, should the way it has been done, should this be a blueprint for other state-owned enterprises, the privatization process? What do you think?
I think it should be the best example to be emulated, especially being made as simple as applying on your phone. And as it is made that a bit cheaper, that is the best example that we can follow. Using a USSD code to apply such that whoever has a small phone can still apply for the same, it's the best thing that has ever been done. So it is something that, of course, it might not be perfect, but along the way, we are reaching where now, making it more democratized, more people can apply, anyone can apply. Actually, now, even through sending messages, it is making even that sensitization possible. Even on that message, we have a link or a USSD code, which makes it very perfect, very simple and seamless. So I can say it's a good way to go.
It's the way to go.
Yeah.
Right. And how will we, in terms of we Kenya, achieve a balance in terms of government control? I know that government is remaining with 35% stake once the 65% is offset, and the participation of citizens in these strategic investments. How do we balance that?
Now, in terms of government control, as much as we might have probably more than 65% holding by the non-government, of course, now at those sitting at the table of decision making, at least there will be more than what the government will give. Except that now, something like IPLA will remain as a regulator in terms of the pricing, which will cushion at least the entity. And a part of that, it will help even the pricing itself. Actually, they factor in what developments have been done. So to answer your question, to control, or rather to remove more of government, is to increase more of the private holding. To increase that, like what they have done in terms of Safaricom, offloading more to the market. That means, of course, decision making will be more easier, no control from the government side. Mostly the decisions will be made by the private sector, which is the best thing that can be done. Yeah. So it's more of now making it more private than the government, and then now leaving a little control from the government, like what is done, and even reducing it further. But now ensuring that goes to the beneficiary. Local investors should invest more, should be educated to invest more, such that we can benefit. Like now, this is an asset that is in Kenya, and it's good for us as Kenyans to benefit from it, more than even foreigners.
Right.
Yeah.
And so how do such public listings enhance the economic resilience of the country?
Now, part of the capital markets is to, of course, provide liquidity and provide avenues for other investments. Like now, one can be able to easily buy and sell probably shares or bonds. That is part of what is being solved by the capital markets. So now, in terms of making it easier, it will be possible by now increasing probably the regulatory point of view. There should be a check on that. Number two, in terms of, can you repeat the question? The
question was how such public listings can enhance economic resilience for the country that is Kenya and maybe other countries.
Okay. In terms of how they enhance the economy, of course, the capital markets provide, it makes capital to the economy. It helps the economy to grow in a way that it can attract more, for example, foreign direct investment to the country, which is very key in terms of development. It helps, for example, a company that is those businesses, companies or businesses that do not have capital, of course, to raise capital. Now, it makes it possible for the money to flow from the savers to those who need to do business, which makes now, in terms of the GDP growth or a growth of an economy, it improves through that because capital is able to flow to where it's required. capital can flow, and also it provides now, if this company has grown to a certain extent, you can still exit and look for other options. So number one, it helps in terms of savings because it provides avenues for like alternative investments apart from bank savings. So it provides other alternative investments like now shares or bonds, whatever, or other maybe private equities, all those. And number two, it helps now capital. This was the first actually, capital to flow in to make now businesses to thrive. And of course, when businesses thrive like Kenya, we have a contribution of around 55% of the private sector contribution to the GDP. So that is likely to even grow. So our GDP, or rather, even for the government, is able to collect more taxes, or rather more revenue to the government as businesses thrive. So in a way, there are many ways how it can help actually in terms of the economy. Those are two ways, but more are like now, definitely in terms of employment, if a company is well managed, definitely there will be more employments. And then definitely capital will be able to grow. As capital grows, definitely the economy will grow. Mm-hmm. So in instances like manufacturing, if they are listed, of course there are some there, so definitely they'll have to, in terms of growth, that company, how the checks and balances are done, how we look at the balancing in terms of management. So it helps to improve that, and of course eliminate probably corruption, and definitely benefit the shareholders. As a whole, a community will benefit. In terms of a community benefiting, there is also that what is called as in terms of giving back to the community. These companies have a mandate to give back to the community. So that is also part of the economic growth. And then once they thrive, once they grow, definitely you will see things like roads being developed. Like now, of course, the government, or rather listings, there is an avenue for some new products which help, for example, infrastructure bonds help to develop roads. Other things like green bonds, also they help to come up with that something that can help, or rather that is economically secure for instances of like now for the economy, for the social, and also something on the ESG. So they helps to look at all those, and of course safeguard the economy, safeguard the society. Of course, definitely, at the large end, the economy has grown through that. Mm-hmm. Yeah. And
of course, when these 106 billion shillings is raised, it will go to the exchequer. And of course, Kenyans have been very vocal about the borrowing that has been happening over the years. And this money going to the exchequer, and of course, more privatization of more government-owned entities is going to happen. So do we foresee a reduction in say, the debt bill by the government? Because more is being injected now to the government as opposed to going to borrow out there.
Something they said is the money is supposed to go to, there's a national
infrastructure fund.
Yeah. So it might not go directly to the exchequer, mm-hmm. but then it will help now ease the burden. For example, developments of infrastructures like our roads. Mm-hmm. So once it goes that direction, then definitely from the government side, a budget that should be catered towards roads will have to reduce. And definitely, as much as it might not have a greater impact in the near term, but in the long term, there is a likelihood that our debt burden, public burden is likely to come down. Mm. Although not for now. There are more measures that it should be looked at. Yeah. Because 108 billion, 6 billion compared to a debt of around 12 trillion.
Yes.
That is really a drop.
It's quite a lot, yeah.
So it might not cater for now, but if we go that way, then in the long term, there is a way of easing that burden. And then, of course, definitely, if this, like now, if we develop some roads like the Mau, Summit Road, if that is developed and some revenue is generated from there, then definitely that will ease a burden on the exchequer, which will mean that some revenue is being generated, less of less of borrowing will happen. But as of now, I don't see something much on it, except that now the austerity measures from the government should be, let them be practical, let them be like deliberate to reduce the burden on from the public debt. Yeah.
Right. Remember, we are making sense of the Kenya Pipeline Company IPO that was issued. 65% stake is being offloaded by the government to raise 106 billion shillings. That particular offering opened on the 19th of January and is set to close in a few days on the 19th of February. And each share is being sold at 9 shillings. The minimum purchase is 100 shares, which is a minimum of 900 shillings that you can spend to buy that particular share offering. And I am having this conversation with Shadrach Manyinsa, who is a research analyst at Pagamon Investment Bank. We want to take a quick break. When we come back, this conversation continues. You can ask us your questions on X. We are at KBC Channel 1 across all social media platforms. My personal handle is at Betty Kiptum. Do stay with BizCheck. Welcome back. You're watching BizCheck here on KBC Channel 1. I am with Shadrach Manyinsa, who is a research analyst at Pagamon Investment Bank, discussing how to invest at the stock market, making sense of the Kenya Pipeline Company IPO, where the government is divesting 65% of its stake to raise 106 billion shillings. And we have talked quite a lot about that. I'd like to hear from you, Shadrach, if there are any risks to this particular investment.
Definitely, and any investment has some risks. There is an aspect of price volatility. So definitely also in terms of execution of the strategy, what they have said in terms of how they will execute their strategy, there is a risk where if they don't execute that strategy, then that means what is projected will not deliver. So there are risks which include, of course, the market risks, which are likely to change things, like what we saw during the COVID. And definitely other risks can come in, like the trade risk, the prices of oil. That is the pricing of oil generally globally. The prices, if they change, then definitely that is a risk. Then also there is a risk in terms of how the company is likely to perform their financial performance, which will, of course, impact the company and the prices. There is also a risk in terms of dividend payout, because dividends are not, sometimes they are not guaranteed. So if the company does not perform well, then those who invest because of income through dividends, then definitely that is a very big risk. So there are many risks. However, the capital markets has put in some good framework which helps in terms of to mitigate some of these risks. So I look at it, any investment has a risk. I look at it from the positive side of it, where we expect the company to grow. In the long run, we expect it to perform better. And therefore, I'll say it's a good investment. Yeah.
So from a regulatory perspective, you're saying things are solid on that end?
From the CMA perspective, they are doing a good job in terms of regulatory or the oversight. And of course, even CMA, they are doing a good job in terms of offering the systems, offering the market. So even them, they are doing a bit of regulatory, which is quite good. So from the compliance and risk perspective, I can say the ball is on the new management, which will be onboarded immediately after the IPO. And if that is done well, the company has nothing to deliver but good results. Yeah.
Right. And so seeing that you sit in a research position, you're an investment research analyst,
exactly.
Right? What are the trends that we have been seeing in the past few years, and how does the future look like from a research perspective?
Now, we have seen a drastic change in terms of the economy. If you look at from 2022 to now, inflation was at a peak, I think in 2022. Currently, inflations are operating at below mid-range. That is at around 4.4 as of January, 4.4%. That is applies for the economy and for even the market. So we have seen generally prices move upwards. but maybe I'll start from a point where the prices were very down, right from post-COVID period, and then interest rates went up to highs of around 13 from the CBK perspective, where actually the market lending rates were probably above 20 from some banks.
Yeah.
And then now the economy wasn't performing well, especially the private sector, going all the way from 2023, 2024 there. And then, of course, it's a combination of several things, right from the global side, then to the local economy. I might not say the global side, but let's look at maybe the local performance. The shilling went to the roof, except now it has come down. That is the exchange rate to the current levels. And then now CBK came in. Of course, there are different measures how to regulate the economy. There is physical versus monetary measures. Now the monetary measures came in right from August 2024, where the rate cuts came in, interest rate declines came in, where right now we have seen that come to a low of 8.75 as of yesterday, which was the MPC report, MPC committee meeting. That is Tuesday, sorry. So since the interest rates started coming down, immediately before, investments were concentrated in probably government securities. More concentration shifted to that side, right from 2023, part of 2024. The rates went to the roof. Some papers were giving us high returns as 18.46%. Now, as interest rates started edging down, there is a shift in terms of investment from especially bonds, bank deposits to equities. So most of the stocks have recorded some massive growths. Some counters have recorded actually close to 100% gain in terms of their prices. So on average, in 2025, we had a market growth of around 51%, about 50% growth in terms of the prices. So anyone who had invested from 2023, 2024 has good returns as of now. That continues even now, favored by interest rates, low inflation, and of course, expectations of an economy to perform. Economy is expected to perform quite well. From 4.7, which was in 2024, is expected to be around 5% in 2025, and then 5.5 in 2026 and 5.6 in 2027. So that expectations and also the general macroeconomic outlook and performance has increased in terms of one thing that has increased in is disposable income. Because of low inflations. Number two, there is more in terms of how the money to invest. Businesses are performing well. The cost of financing businesses has come down, and this is expected actually to even come down further. Currently, the commercial lending rate is around 15.4%. It's expected to come down. Actually, in my own view, I can say it should come to around 14, between 14.5 there. So with the rate cuts being there, we have seen some slow transmission of the same to the market. As the transmission of the rate cuts from the monetary side to the market, as that is going on, the markets, of course, equities market will continue to rally upwards. And that has been the case. Actually, from January 1st to date, there has been substantial growth even currently, above almost between 7% to 10% growth in terms of average prices for the market. So there is a shift of investment. There is more education, more education. More investments are coming from retail side. Actually, something that has affected the market is another thing. Foreign changes in the international market has also resulted to some outflows in our market, especially foreign investments. But local investors are positioning themselves very well. Actually, currently they are pushing the prices upwards. If it were the case, even where a situation where foreigners were coming in, then we should have expected the prices to have even performed even better than where they are currently. So we expect them to perform. Like equities are expected to even perform better, although they might not reach the 2025 levels of about 50% on average. but there will be some substantial growth. And part of that is the cost of financing for businesses have improved. As the cost of finances improve, then definitely businesses get cash to do more business. There is more return, especially if you look at the banking sector, profits have been growing consistently. And as a consequence, the return on investment from dividends have been rising consistently. That has seen the prices go up. Yeah.
Now, two questions for you on the political side of things. We know that the political window has already started, and it's a electioneering year next year. Kenya's cycle normally goes every 5 years. There's a dip, and then we go up. There's a dip, and then we go up. So what do you foresee within the next 2 years, so to say, into the electioneering year and then beyond that, based on what has been happening?
Now, in terms of how from 2012, 2017, 2022, there was that cycle, but very minimal.
Okay.
We expect minimal impact in terms of politics to the equities market, even the bonds market. And the reason why I'm saying so, our economy, all our politics is a bit mature if you compare to the peers in the East Africa. So we don't expect much shifts. As much as there might be some marginal declines, we don't expect them to impact the market as much as, to a great extent, to what happened in 2008. So definitely, most of these companies, listed companies, and where the market focus is, most of them have been performing fundamentally. Fundamentally in that the company has been growing internally. And also the earnings have been growing progressively. As the earnings grow progressively, definitely, even though the political side might affect, it will be very minimal, considering that the companies are very solid, most of them. Part of our recommendations as Pagamon, they are very solid recommendations where the company has performed consistently. We tend to look, of course, I understand that history does not guarantee the future.
Yeah.
But then history can inform what is likely to happen in the future. And that is what we look at, and then, of course, do some projections and give our recommendations. So as of 2027 national elections, we don't expect much changes on the economy because we are at the early stages of recovery, which should spill over to 2026, 27 next year, and even beyond. Because we have been in a long period of some kind of a dry season, especially from COVID side, where the markets were not performing well. We had global issues which impacted generally supply chain. The supply chain was constrained. And then currently things have stabilized, except that even if we saw some changes, especially from the US side, for the trade policy changes, even what was projected has been narrowed down to minimal levels because the impact was expected to be massive, but now that impact it's like markets have adjusted to the impact. And now the returns are even GDP projections that were reviewed downwards. Currently, as of January, some of the projections were returned to where they were that is to last year as at June, before the announcement of the tariffs. So that one has already cooled down. Now, as businesses grow, I don't really expect much impact from the national elections, except that the prices are likely, of course, there is that cyclical, what we call as technical price movements, which you cannot really avoid. So as prices readjust themselves, we don't really expect much downward shift, except that they will be shielded upwards, cushioned upwards because of the performances that are currently in the market and also the earnings that are being reported. Yeah.
Right. So the outlook does not look as grim. It actually looks positive, yeah?
Very bright.
Nice. So as we come to a close of the conversation, Bwana Manyinsa, just give us your closing remarks and yes, take it from there. What do you expect?
Now, expectations on the market, we expect some rally to continue, especially with the earnings coming up in March, especially for the banking sector. That is where the focus has been, and part of that focus is because of better returns in the sector. We expect Safaricom to continue performing even better actually we issued a by recommendation on it. Part of that, what is informing our recommendation is Safaricom Ethiopia is coming out of losses, is progressing to profitability come March next year, 2027. That is where we expect that. And then currently how the company is performing, or generally the other markets are performing. As interest rates come down, we expect some further cuts. For example, we do expect probably the benchmark rates to come down to levels of around 8%. And that, of course, will push economic growth. The reason why we expect that rate cuts to continue, we have seen the private sector credit growth remaining roughly at around 6.5, 6.4, 6.3, 5.9. So the favorable rate, or rather growth rate, should be around 12% according to the CBK. And as we approach that, we are still far from that. We are still at single digit compared to where the projections are supposed to be. Mm-hmm. So as we continue in the course of the year, we expect some, maybe probably 2 additional rate cuts, which now will return to help in terms of the private sector credit growth. That credit growth will push now, of course, the general economy. So our outlook for 2026 is bright in terms of we expect prices to continue going up of equities. However, in terms of the government bonds, we expect that the prices, or rather the returns, to narrow down, because there is a correlation in terms of the CBR, the central bank rate, and the actual rates that are being issued for the bonds. Like yesterday, we saw the rates were cut by 25 basis points. That had an impact on the auction that happened yesterday. The rate was cut on Tuesday, and then yesterday on Wednesday, there was, of course, implementation of what the government had done. So there is a deliberate move to see that the private sector is moving, is growing, which is a plus to us. We can say it's a plus to the capital markets authority, the capital markets in general, which will push for more growth, more returns to the investors. So I can welcome whoever that wants to invest. I'll leave them with a link. We have Pagamon Investment. We have we have a mantra where we say leveraging Africa, investing globally. We are looking forward to even regional growths, where we expect even to grow to Ethiopia, and to have some, of course, a replica of the same what's happening in Kenya going there. So we are looking forward to, of course, acquire more clients in terms of, we have gone actually fully digital. As an investment bank, we are fully digital, and I think we are among the first ones in terms of going digital. Okay. You can open an account, go to our website. We are Pagamon Investment Bank. There is a link there. You can apply for whatever you need. In case of advisory, we have we have a competent team in terms of advisory. Okay. We have corporate management, corporate finance, which helps in terms of capital raising, and also in terms of advisory in case of probably debt restructures. And then we have research, where I sit. We offer very quality reports in terms of our outlook, how we look at the market. Our recommendations are top. Okay. We have seen consistently, on terms of what we have offered and in terms of growth, there has been a replication. So, and then we have other services. We have gone free digital, where the discussions surrounded. Okay. So we are fully ready to onboard all the clients, or rather the retail.
Awesome. Thank you. Thank you so much, Shadrach. That is Shadrach Manyinsa, who is a research analyst at Pagamon Investment Bank, just helping us make sense of investing in the stock market, from the newly opened KBC IPO to what the capital markets is doing to ensure that more Kenyans and more retail investors can access those investment options at the Nairobi Stock Exchange and other capital market investment options.